All right, so hello everyone. Yeah. So hello, welcome to weekly analysis. Yes, we already know how the market is playing out. Yes, it's annoying. Yes, I mean for those of us who trade in a certain way, for those of us who have a holistic approach to the market, top down analysis. You know what you know the rules already. You know sometimes it's annoying. It's annoying where the pairs that we have in mind are not giving us the exact things we want. It's annoying, but there's nothing we could do because you need to understand one thing is this: anywhere the market goes is where we go. My decision does not influence the market. Your decision does not influence the market. If you think when you place a trade, the market is going to go your direction because your trade is meant to influence the market. Nah, that's not how it works. How it works is that wherever the market is going is where we go. So weekly analysis is this: the pairs we are looking at, Euro USD, GBP USD, AED USD, they are not trending right now. They are not what trending right now. The monthly time frame is still bearish because we haven't broken structure. You know, the weekly time frame is still very bearish because we haven't what broken structure. But the problem is the daily time frame. That's the problem right now. The daily time frame is bullish. The daily time frame is what is bullish. You know, I was thinking to myself like, you know, the market is not always going to trend. It's going to, to be very honest, the market consolidates more than it trends. The market, I take it again, the market consolidates more than it trends. So you can see there was an entry here, there was an entry here. So these were the only two times we could trade Euro USD. I could trade Euro. I don't know. A lot of people had other entry strategies or whatnot, but the way it is done in total analysis, these were the times that I could get an entry on Euro USD. But moving on, Euro USD is bullish right now. There's nothing we could do. Stay away from Euro USD. Stay away from what Euro USD. It is bullish right now on the daily time frame. There's nothing you could do. There's nothing until we break structure. Until we break structure, and then get a retest. Because this then will be a head and shoulder. Get a retest on the left shoulder, and then we can start looking for entries. And if you look to the left, you can see that this place is a very nice area of interest that we've used before in the past. So it will be nice. But for now, there's nothing we could do. And I used to think to myself, you know, should I fold my hands? Should I, sit on my hands, you know, without doing anything? Now you need to understand this right here. You need to understand this right here. The idea we use, or rather, the idea we take into the market is top down analysis. It does not matter what pair you trade. I mean, it does matter what pair you trade depending on the movement, but the most important thing before you look for a pair is to have the idea that whatever you are going to trade, you need top down analysis. If you're going to trade whatever pair, you need what top down analysis. The GBP USD is also not trending right now. It is on the weekly time frame. On the higher time frame, the market is trending. It's trending on the weekly. It's trending on the monthly. But whenever you see a shift of structure, on the lower time frame, like the daily, the 4 hour, the 1 hour, it could well be a retest or rather a retracement on the higher time frame. As you can see on GPSD as well, it's bullish. We're bullish. Lower low, lower high, lower low, lower high, lower low, shift of structure. We're bullish, right? But then on the weekly time frame, we're still very bearish. But it could well be a retest of what structure. It could be a retracement. That's all it could be. That's all it could what it could be. So what do? We just let it be. We let it be. We do not go hunting for entries in a place where we know in a pair where we know that we are only looking for sales. I did not go looking for buys because the daily is bullish. No, we don't do that here. You do not what do that here. You're going to lose money. You're going to what lose money. All you have to do is be patient. All you have to do is find the right market condition what to get in. Find the right market condition to get in. GPSD is a no go. For now, GPSD we have to wait. We just have to wait for GPSD. We have to wait for GPSD to break structure before we can look for sales. Now, ADSD as well, like we said, ADSD is also bearish on the weekly. ADSD is bearish on the weekly until we break the structure. For now, we are looking for sales, but for now, we have to wait. We have to wait. Keep waiting. That's how it is. That's the game. It's more waiting than trading, to be honest. There is more waiting in trading than there is trading. Do you know what I mean? There is more waiting in trading than there is trading. You're going to spend more time waiting for an entry than you're going to, get entries in a year. So what we have to do is to wait. There's nothing to do. All we have to do is wait, wait for the market to break structural retest of the head and shoulder. You know the deal. All we have to do is wait. There's nothing we could do. Now, there's something I'm going to say. You see AUDUSD, for example. AUDUSD is back into our weekly time frame. Sorry, our weekly area of structure. Now, we know that this is the almighty area that AUDUSD consolidated in for a long time. We can see this. We can see this right now. You might be asking a question. So we're back in here. Should I not look for buys into this place because we're back into our weekly zone? To be honest, you should not look for buys. You should look for a pair that has three time frames in confluence: the monthly, daily, and the weekly. Now, if you see on the weekly time frame, you can see on the monthly time frame rather, all that there was, for us to do was to wait because why? The market was having a mid-term reversal. There's something. Listen. The market trends and the market reverses. The market what trends and it reverses. All that we're having right here on Euro, for example, if you remember this, this almighty area on Euro, this space, this space was, we're in here for like what, 3 years? So rather 2 years. I mean, pardon me. We're in here for like 2 years. You see what I'm saying to you? We're in here for like 2 years. All that there is to do is just to wait. Now we could look for sales because that is the only time it is in confluence with the monthly time frame, the weekly time frame, and the daily time frame. But one thing to look for buys, say for instance, for example, the weekly time frame break structure here, yes? Imagine if we break structure right here and we start looking for entries to the top, to the upside. I would advise you, listen, if you must do it, reduce your risk. Whatever your risk was when you were, trading the trending market, reduce it, cut it in half. Why? Because you are trading a reversal. You are trading rather, so not a reversal, a mid-term reversal. You are trading a mid-term retracement. That's all that there is, a mid-term retracement. On the monthly time frame, we are still very much bearish until we break structure. On the weekly time frame, when we break this structure right here, we become bullish. Yes, the daily time frame then becomes bullish as well. Yes. But is it ideal to get into a trade like that? Is it ideal? It is not ideal. But you could get in if you have the right entry strategy. If you have it, listen, everybody and their grandmother can show you a trending market. Everybody and their grandfather can tell you, yes, the market is bullish if you're, but not everybody has the right entry strategy. Not everybody knows the right time to pull the trigger. Not everybody. Everyone, listen, it could take you 6 months or a year to master trends. It could take you 6 months or a year to master where to plot your lines for entries. But listen, it's going to take you more time to master when to enter. It takes more time. Listen. I know, listen, it takes more time to master when to enter the trade. It takes more time. It takes more time to master when to enter a trade. It takes more time. The first thing you learn is to identify a trend. The first thing you learn is identify a trend. The next thing you learn is where to get entries from. The last thing you will learn is when to enter. That's the last thing you will learn. And when you have that, you're complete. Now, all I'm saying is this: if you're because we need to have scenarios. We need to have scenarios. That's what this is. This is a game of probability. So we just okay. When this happens, I do this. When this happens, I do this. When Euro USD breaks this weekly structure right here and become bullish on the weekly time frame, as it is on the daily time frame, but not on the monthly time frame. Now listen, why am I hitting on the monthly time frame? The monthly time. Listen, we only need one pair. We only need one time frame to tell us the overall trend of the market. We only need one time frame to tell us the overall trend of the market. The monthly time frame is that time frame. The monthly time frame is that time frame that tells us the overall trend of the market. If you go on the monthly time frame, whatever pair, and you see that it's going this way, that's the trend. All you have to make sure is that the weekly and the daily are in confluence before you can, start to plan your entries. So on Euro US, for example, on the weekly time frame, we are still bearish. But if we break structure and be above these weekly areas right here, and start trading in this box again as we did a long time ago, no problem. I leave it. I go look for there are other pairs that move in a manner that yeah, it may not be like the way the dollar moves, but the most important thing is the fact that I have everything in confluence. Now, what's that pair for me? I've gone to scour the earth, and I found Euro CHF. Do I like Euro CHF? No. You see what I'm saying? Do I love traded pairs like this? No, I do not. I prefer dollar pairs. But what should I do when I do not have my desired pairs in confluence? What should I do? You see what I'm saying to you? I already have the master strategy. I already have the master approach to the market, top-down analysis. All I have to do is to implement this in whatever pair I desire to trade. Now, Euro CHF, the monthly time frame is bullish. How do we know that? Lower low, lower high, lower low, lower high, lower low, break of structure right here. You can see Euro CHF what broke structure right here. Lower low, lower high, lower low, broke structure will became bullish. Came down all the way here. Now, the market does not make mistakes. The market moves precisely. Came down all the way here. We never broke what structure, so we are still what bullish. Now, when I saw this, immediately I saw we were bullish. First thing I did, next thing I did was to go to the weekly time frame. I don't draw anything. I don't draw my lines on the monthly. No, I went straight to the weekly time frame to see what's going on. Is it bullish as well? I saw lower low, lower high, lower low, lower high, lower low, break of structure right here. So lower low, lower high, lower low. These two highs right here are considered as one. So lower low, lower low, lower high, lower low, lower high, and then yeah, lower high, then the lower low. So we then broke structure. We just broke structure actually. This last week we broke structure last week. So by next week I'm looking for entry. Now I know we are bullish on the weekly time frame. Very good, beautiful. I go to the daily time frame to make sure what we are also bullish. Now you need to understand how I am saying everything has to be in confluence. Euro USD, the dollar pairs right now, they're not trending in confluence. But on here, Euro CHF, you know, the everything is in confluence. The monthly is in confluence, the monthly is bullish, the weekly is bullish, the daily is bullish. All I'm gonna do is what? Look for interest. Now, for example, for example, yeah, the dollar pairs decide to go into the same range it was in last year, last 2 years, no problem. I have Euro CHF. As long as Euro CHF remains in the trendy position of the monthly, daily, and weekly, I don't care about anything else. I just have to focus on what the pair that is what trending. So yeah, so Euro CHF lower low, lower high came here, created a lower low, lower high, lower low, broke structure right here, came, we tested it. Now we're bullish, very much bullish. Now all I have to do is look left. That's all I have to do. Look left. We have it. We've had the what? We've had the move right here. We've had a move right here. All I have to do is look left and use this past areas to know where I could get my interest from. What I look for are chart patterns. I can see double top right here. My first entry is gonna be right here. My first entry is gonna be right here. Now, what I'm gonna be looking for next from next week is a retest of this area right here. That's all I'm interested in. A retest. Now you might ask, why is this box here? This box is here because of my retest. Now, there's something you need to understand. If you go back to the beginning of the video, one of the things I mentioned is this entries. Not everybody have been able to, unlock the key to, entering at the right time the market is about to move. You see what I'm saying to you? A lot of people are already in this trade. A lot. You see what I'm saying? Not everybody is waiting or rather willing to get a perfect entry. Now, I'm Dagba Willis, he does not, box it out, but I box it out. Now, for me to be able to not enter a trade prematurely, I need the past to give me an idea rather, to give me an idea of what to expect in the future. You see what I'm saying? So higher high, higher low is 4 hour right now, yeah? Higher high, higher low, higher high, higher low. All I'm waiting for is this retest, you see this consolidation right here, I need it to happen here. Then I will know that the market what is about to go up. Then I can look for entries. So long as we have not completed this box, which is also equivalent to this consolidation right here, I could count the candles and expect the same amount of candles, but I rather fill the box. It's an idea that came. I rather fill the box. I rather will fill this box. When the box gets filled, then I can plot out my counter trend line, plot out my break of structure line and whatnot, and I can look for an entry. Now, you might ask, am I going to hold the trade all the way to this rate? No, I'm not. My first TP is going to be this impulse right here. Wherever this retest starts from, that is where I'll you know. So say for example, this is where it ends. This is where the retracement ends, and then my first TP will be the impulse right here. How did I get this impulse? Now listen, trading is about history. To know the future, you need to look at the past, right? Now, if I'm also going to be thinking of the consolidation that has happened in the past to get the consolidation that may happen in the future, I'm going to also use the impulse to get my next what impulse. So why is that? Because when the market completes an impulse, it goes into a range again. You see what I'm saying to you? When the market completes an impulse, it goes into a range again. I do not want to be in that range. No, no, no. I do not want to what be in that range. My first take profit, or rather my 100% level, would be at the end of that range. You see what I'm saying? At the end of that range, or rather of that impulse, that is where my first TP will be. If the market decides to go in the range and come back here to entry, no problem. But I'll take majority I'll close majority of my position right here at the impulse. This is a hypothetical. I do not know if this is where the impulse will end. I'm just trying to give you an idea of what I'm looking for. You know, so when I get here, I take majority stop loss or break even, and then I hold all the way to the top. I hold all the way to the top. I get another entry from here. I hold all the way to the top. I get another entry from here. I hold all the way to the top. That's the plan. That's the plan. That's how laid out it is. So I'm saying, so do not frighten. Do not have itchy fingers. No, no, no. Do not pull the trigger every time do not pull the trigger every time you see the market is against you, or rather the trend is against you, and you need the trade immediately. No, that's not how it works. Let the market breathe. You've taken money from the market, right? Let the market breathe. Give it time. You've taken money from the market. Now let the market breathe. Give it time. The market is always going to give an opportunity. You just have to wait for the opportunity to come to you. Stop running to the market. Stop waking up in the morning and you run to the market and I have to make money. No, that's not how it works. You have to let the market come to you. You have to let the money. Do not chase the money. Do not chase the money at all. Let the money come to you. It's what I'm saying to you. Let it come to you. So for next week, we do not know if the daily time frame on Euro USD, GBP and AUD is going to be in confluence with both time frames, the weekly and the monthly. From next week, we do not know that. But the only thing I can control right now is Euro CHF, is my entries, because I see it is bullish. I see everything I need. I see bullish engulfing on the weekly time frame. I see bullish engulfing on the weekly time frame. That's a chart pattern I need. A bullish engulfing right here, and another bullish engulfing right here. It's screaming buys. That's all I'm trying to say. It's screaming buys. From the same area, the market, gave us this nice retracement to the upside on the weekly time frame. In the same area, we are getting a bullish engulfing again. Like I said, it is screaming what buys. It's screaming buys. I'm not gonna say, oh, what if? No, I work with what I see. I trade what I see. I see the market is looking bullish. I trade it because it is bullish. I trade it because the market is telling me it's bullish. So once again, thank you for watching. Subscribe. Turn on post notification. You know, and just enjoy the content. Enjoy the content. Enjoy the content. Learn from it. Thank you all. See you next week. Ciao, ciao.